Hey everybody, what's up? It's Booksy. Today is Sunday, August 27th. This is going to be a quick overview for AMC. I'm not going to go into a full explanation or high detail about every little piece of this. Huge week. Lots that we could talk about, lots that we could digest and go over. But my focus is going to be this week on just giving you what I feel like is my 2 cents. And the short and simple version of this is that we need to get over 38.50, and ideally that $45 level. It's a bit of a range here, but if we don't see us come back above here in the very near future, we're not going anywhere. And a lot of it has to do with where the SOS was and is, I should say, for that combo chart. Now I know what you're seeing here is like, hey, Booksy, you had these charts that you used for a long time and they're all gone now, right? And the answer is yeah, they're basically all gone now. We had an opportunity to look at those in the last days here and just kind of explore last minute, what was going on with the stock price. This is the last major screenshot I was able to take. So what I did is I worked and I actually did these markups in this program, which is just the preview. These aren't in trading view because they were gone. So this was before conversion this week. And remember that particular chart, and you can kind of see it gets cut off a little bit, but that particular chart stayed in a range, and it stayed between $2 and $4.71. And some of you are keen to know that number, $4.71. Was the 618 value for the big move. If you use the chart shifted chart here, it was the 618 right up top there, right before it distributed as well. But you'll note that the 471 is not the area that we distributed from on the combo chart. We actually distributed from middle of the range. And we kind of did that on AMC as well. It was right here, but oddly, the number ascribed to that is at the same area. So if you looked at the AMC chart, now it's $47, right? But that 471 was that area that we broke down from, which would have been like the 618 rejection. But interestingly, on the combo chart, 471 was not the area we broke down from. Rather, it was lower than that. It was in the mid-range, around 3. And then 471 was actually the SOS range on the combo chart. So you got to make sure that that's distinct in your brain to understand what I'm about to say. In the combo chart, the stock price had not dropped beneath 201. And it didn't do that until the day before conversion. And we know that it dropped because we were watching it drop. The prices changed. Everything got that 17 to 15 split. And then we noted that it came down pretty low. And I tracked it on the day of conversion, and we had come down to $14. And then, of course, we came down to $12.43 by the end of the day, which would put us somewhere right around here, okay? And this is important to note because on the combo chart, we had this breakdown happen, and it would be constituting like a spring action. We did come above the automatic reaction on the combo chart, and this, again, is like a combined liquidity chart for APE and AMC. And this was the one I used, that formula where you calculate the total based on how many shares outstanding were in each, and then you divide by the total shares outstanding, and you came up with this number, which I called a baseline. It's hard to explain that now without the live chart anymore on TradingView. But anyways, I digress. The point is that this guy had never come above it did come above the automatic reaction, but it didn't come above this earlier automatic reaction, but it didn't come above the top of the range. And so it didn't actually distribute like a normal stock might. And yeah, though this chart didn't quite exist in the same way that we would say AMC or APE existed by themselves distinctly, this chart was highly predictive of price action and movement over the course of the last 9 months. So when I talk about it, it's important to understand that there are some key differences in terms of how high it came. And on this particular chart, how low it comes may also be determinant of a spring versus on AMC where we lost the $3, and we talked about that last week, and that was the lowest that we could have gone, as opposed to here, which probably could have come pretty low and not lost a spring. So at the time that we lost the spring on AMC, that $3, we were still inside the range on the combination chart, which tells you something, is that maybe the combination chart, if it's possible, right? Because it's kind of like a way of looking at what liquidity has actually been explored. And you have to remember that APE, while it only traded for like 10 months or whatever, or 12 months, excuse me, largely spent most of its time under $2. So most of the trading that occurred was between that low area, and I wouldn't even say $1, but you could maybe say 80 cents up to 250, but I'd say that's kind of generous. Most of the trading occurred between around 140 and $2, which is a really small area. I mean, it really went sideways in a specific pocket. And when you come and look at something like the VRVP now, and you know where that area is or was, you would say that it was actually quite low. It was trading almost in these bottoms from 2020. APE by itself was. And we know those shares were convertible in the end and ended up becoming, AMC. They were in the conversion. So if you had accumulated those shares on APE, you would be in a good spot right now. However, notice that where we are currently, that $1.24 or $12.43 rather, is much closer to the bottom, right, than the top. So if you think about APE, it's almost like we went towards the APE price as opposed to staying near the AMC price. But interestingly, the combo chart, again, because this traded high and this traded low, and I don't know if you recall, but I had posted, let's see if I can pull it up really fast, this guy. And this is what the combo chart looked like a couple days before conversion. You can see that APE traded very low. It traded on average like around this kind of, I would say 160 level, and so it had consolidated really low, and AMC traded really high. And on average, that means they traded right around $3 for several months, almost a whole year. So the idea of like, where have we traded? It's interesting because when you look at where the combo chart traded, and this is coming into a point very quickly here, it's mostly like right around here. It's mostly in this low liquidity pocket, which is kind of confusing. But if you think about averaging, and if you were trading both AMC and APE, you really would have had an average that was very close to this very low liquidity pocket. So right now, it's below that average. It's much closer to the APE average. All right, so just to put it into context of what's going on, maybe when I talk about stuff like this, I just want you to know, like, that's what I'm looking at when I'm saying combo chart. Okay, I'm thinking about this pretty simple idea, but it's interesting to note like where that is, right? And I also think that the main reason I wanted to bring that up right now is because that 471, right? We just talked about it. It ended up becoming 446 like the day before, right? The conversion because of the slight chart shift. But that particular area is the SOS. And interestingly, that's the same exact place that we see a need to come back up here as well. Now, I'm going to talk about a few scenarios. I'm going to start with the bear cases here, and then I'm going to jump back over to the bull case, which is the one that's on screen right now. Basically, everyone that I've looked at suggested that, yeah, you could come down pretty low here and maybe even lower than it is here, but ultimately double bottom would be better, or having a higher low would be better. We know that. But ultimately, like, we're really oversold on the daily. We're getting pretty darn oversold on the weekly as well. We're about to that place, right? Almost as oversold as we've ever been, at least since 2020. And on the big picture, you're looking at how, again, that combo chart suggests that we really want to distribute by coming up to that 471 region, that was ultimately like where we would maybe come back to. And I think it's not impossible that we see a pretty strong reaction back up at least to this lower range where we were buying up before that big drop, which was a lot of institutional movement. I think probably a lot of people have made good points about this. Probably has a lot to do with those Antara puts that they had on their books. So I'm expecting some kind of a major reaction to the upside here. I don't think it's unlikely. Even in the massive drop that occurred in the 2020 drop for COVID, we still had an auto reaction back to the area that we ultimately hooked from. And one would expect us to do that and come up near this liquidity gap. And then the next thing that happens, right, is the most critical, okay? So if you happen to have a throwback here or a pullback, fine. There is a strong chance that we hit, and you can see on this blue line coming down here, this is the main creek line that I want us to focus on, that we could end up gap filling and actually rejecting off that line at the same time. And if that were to happen, you're not getting to that SOS range. However, if we exceed it and then we have a pullback, it could be really far or it could be really shallow. It doesn't matter. If we start to SOS across this creek, you're basically out. You're out of the woods. And I've noted to a lot of people during the stream while we were talking about it, and then also like, it doesn't even matter, right, which scenario you pick. If you come up to that area, you are testing that super macro creek. So any kind of a reaction back up here would be a major test of this downtrend, okay? But here's the thing, right? And here's the big problem. If you were to reject, or if you were to come a little too high and then reject, which again, I'm not sure if it's going to happen because we already went up and hit this level. It's hard for me to think we do it again. I think it's more likely that the shakeout doesn't have us coming as high. But there's two major bear possibilities. The one has to do with iterations that break outward. And basically this would be like a gigantic halfway point for a massive S-curve. And thus far, it is provable. There are two S-curves that break up another larger S-curve, right? 1, 2, and then there's a big one that's 3, and it ended up fulfilling it. It's a stinky one. I didn't think it was going to fulfill. I thought we'd get the shallow S-curve with the spring, but that didn't happen, not at 3. Okay, so it went all the way down on AMC. You can see that this has happened before. There was another shallow S-curve set up over here with a double S-curve down, S-curve 1, S-curve 2. Each of these guys is setting up platforms, right? So you've got an AB, an AB, and then a possible AB. And that would be a very, very large scale, long-term distribution. And the best I could tell is that eventually, you know, you can see right here, you might come down to a really low creek and possibly even down to $1. I'm less likely to think that happens in some kind of immediate drop right now. I think it's pretty unlikely. I think you would need a long-term distribution to make that happen. You would need to have everybody panicking, and every time you come up to that $43 area, or you know, whatever it is, I said 38.50 because it's an intersection right here on the chart, but it really comes up higher to like 43. Every time you come up there, you get some massive sell-off, right? And it basically turns into a really large version of what we saw in March and August back here in 2022. That's a very long-term distribution schematic where basically everything above where we just were, that 618, is now not what we want to like go after. We don't really want to go after that. And there's another major player in that idea, and that is the liquidity center. The highest liquidity spot on this stock right now is at that level. It's at the exact same spot. So getting pinned beneath it would suggest that you don't really want to come back up. There's no desire to come back up and trade shares high again. So it is the natural place. The highest liquid spot now on AMC is right where we dropped off. Everything kind of depends on that. And I think if you come up and you meet that spot and you can SOS around it and then find support on top of it, very strong possibility. You're going to come all the way up again to that $21 level that we talked about, which is now way up here. Yeah, closer to 200, right? But the idea of that, right, is it has to be after you jump over this, okay? If not, then where else are you going to go, right? Well, you're going down. You know, and I'm not saying that you necessarily will do that right away. I think it'll be a reactive move and then, you know, work its way down. I really think that the slower is more likely in this case, just based on the way it's traded in the past. There's another possibility for the bears here, which is one that involves more of these consistent breakdowns. So I measured it out and I looked at it, and it looks to me like what we just did is we passed through the entire combo chart range, and now we're sitting beneath it. And it did come lower than I think when I made this chart. It ended the day at 1243. So there's quite a shift that happened, and I'm going to attribute that to that reverse, that not reverse split, but that smaller split that happened before the major reverse split. I think it shifted the chart down a little bit. So if you distribute around the combo chart, meaning you come up to that 38 level, and then you distribute again, which would again, if just to refresh your brain for half a second, come up here and then redistribute down. And what I noticed is that each of these is evenly distributed. Okay, each of these levels that I've marked off in blue, and each of these major S-curves is basically identical. So they have not changed how they've moved across them. There is that big reaction though each time, and that's important, is that no matter what happens right after that S-curve, there's a big reaction to the upside, big reaction, big reaction. I'm expecting another big reaction back up to that marker. That's another kind of proof there that we're going to go back up first. But buried in that is if you get to that top and there's a distribution, then basically you would continue the S-curves potentially, right? And this could be very long-winded, much like this guy was, you know, and I think it's probably the longest one that we've had, but certainly it was very long-winded here as well. So it wouldn't be like immediately go up and then immediately go down. It'd be like you go up and then you come down and you make a new low, right? And then you push out again, try again, and this time maybe you fail a little bit higher or a little bit lower, and then you come down. So it'd be very similar to these guys where it's kind of a, let's call it an M shape, since we like those, right? Where it's pushing up and then coming across and dropping. So all of that being said, what about the bullish one? Because you said this was going to be a short video and it's already going pretty long. Well, the bullish one is based on the two charts. One is the father of all charts, and the other is the macro or the master chart. I've used this for quite a long time. I've used it for sine wave analysis, where we talk about the ups and downs. I've used it for talking about distribution and accumulation and what they look like on AMC. I've used it for talking about creeks and how the creeks manifest on AMC, both creeks that go up and creeks that go down, and how that relates to sine wave analysis on AMC and how you can see those crosses as they're happening. And you can even see maybe sometimes what the price targets might be. But there's one thing that I missed, and that was a disconnect between that and the other stuff that I did about the right side, which has to do, again, where I'm coming back with the father of all charts is what I used to call it. And what the father of all charts was this kind of this diagonal ascension that was happening. Now, yes, these are hitting key and critical horizontal levels. But what's interesting is that the fractal breakdowns for each of these is very similar to what we see early on in the stock. When the stock first came up, made an all-time high, and then started coming down into the big COVID drop. There's a very methodical walk down that happens, and all of these levels that get hit are the same levels that we're hitting now on this ascension. And a lot of it comes back to what I thought was going on when I used to talk about, and I still do, I still talk about it, I just haven't talked about it in a little while. For macro videos and stuff, I talk about where do I think we are. A lot of it had to do with this guy right here, which is a series of head and shoulders. It's also a series of shrinking iterations where you have this sort of formation right here, which is like the typical cat ear we see on AMC. And each time those sine waves shrink down, you see the exact same thing playing out over and over and over again. So finally they're so small and then you just capitulate, right? But here's the thing. One thing I never did, which I should have done, okay, and I know there's a permanent line on here that I can't get rid of, so it's going to be a little odd, is I didn't take this and just look at it again from that head and shoulder perspective. I did this like once, and I looked at it only for the purpose of the head and shoulder, and you can see that, yeah, it works for the head and shoulder. But it also works for something else, and that something else is as an overall trend, this works pretty darn well. And I'm going to kind of butcher it for the drawing, so don't, if it's not completely perfect, don't get up in arms about it. Basically, I didn't do this for whatever reason, and I didn't make the connection that the father of all charts is really just a manifestation of this very, very, maybe minor for you, but very, very important, this kind of theoretical thing for me, which is as this sine wave is coming across, right, it is bound by an upward channel. And interestingly, and you can see it right here, when we're walking down, these guys that are being hit right here are doing so, right, walking down along those parallels. Essentially, like, what's happening is that they're checking liquidity levels on the way down here. And then those same liquidity levels are checked again on the way back up, and then again on the way back down. In order to satisfy a range, you essentially not need evenly, I wouldn't say evenly, but you essentially need to check every supply level, right? And one of the things that dawned on me about that was this particular reality right here was when it got to the end, it doesn't really matter how you draw it. There's no way to draw it so that this spring doesn't go below what would be considered the actual like channel mark here. Now you can draw a channel really low down here onto that big bottom, but you can't do it here. Like, it doesn't matter how you do it, it won't work. So it always goes below it, and I knew that it had come back to the previous spring in Mark 6 through 7. I've known that for a while, but I always thought it was just mainly because, that's where center liquidity is. You know, it also just happens to be center liquidity. It made a higher low and it took off, and that's all there is to it. Well, not every schematic makes a higher low. Some of them drop low. Some of them need to go down and change character and then come back up. But this reality right here, okay, of we're walking down, checking all the levels, walking down, checking the levels, pushing up all the way through them, and then doing it again, it just kind of clicked. I should be able to then draw this, right? This particular marker right here on the chart that we have right now, and it should tell me where that support was, and then ultimately where these bottoms are. So I went back and I looked at that, and I've got it bolded here, and you can see that sure enough, it is very, very much the same. There is a strong sense of support here, right, which is what you get. And in this case, it never came back below it again. That drop didn't come back down. But if it had come back down, it does make you wonder, well, what would have happened? And so I know I said I was going to keep this brief, and I'm trying my best. I'm trying to get this point across because I think it's really critical, right? Notice that when this comes down, okay, it not only checks that level horizontally, but it also checks it diagonally. Notice that this comes back to the very, very level. I mean, like down to the wire, right? This comes back to the very spot that this thing took off from, the first green candle right here on this spring. And for us, on our general picture right here, we can see that that would be right there at 1165. Well, I went back and I looked at 1165, and I went and did a comparison. And this is where things are going to get a little bit maybe controversial, because you might be saying, well, retrospect is 2020, and if it works, it's not, because you found something. I don't know. I think you could debate it, but here's what I'm going to say, okay? I don't know why there's an extra line there. It's going off to like nowhere land. That's always fun, isn't it? Thanks, TradingView. I'm not sure what that is. It doesn't need to be there. I basically went from the center point of the cat ears on each one. Here, 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 and then here. And I know it's kind of weird, and I'll talk about this one maybe in a little bit, but this one's actually different. The center point is actually this one, which is bizarre, but I think on AMC it was different. Anywho, point is, notice that you do get exactly what you would expect here. You get the sine wave cross, and it happened in a very particular way, right? So you have a rejection, and then there's a smaller M cross that happens right here, and then it comes down again, and in this case it creates this guy right there. Now this is kind of interesting, because if you look at it as just a one simple wave, right, and you kind of take out all the other noise, here, I'm going to fix that in just a second, this is all you see, and that becomes like the first wave, right? And then the second wave would be from this point, and very similarly coming down and crossing, and this would be your second wave. right? And then the third would be this guy right here. And this guy goes way up far, and then drops and comes way back down. And notice that all of these lines, these trajectories, all of them are pointing to the exact same spot. And this is very similar to what we see here, where all of these guys are kind of directing their attention to where we're going to be going in the future. Okay. Now what's bizarre about the comparison is that this happened horizontally. So this is really going like very sideways, right? By comparison, it's almost upright if you look at the big picture, but if you look closely, you can tell, yeah, it's coming down. So this had this parabolic move up to a higher high, made a higher high here, and then it comes down in a flagging pattern, right? And it finishes that structure here in a flagging pattern. And this is going to be really important, again, in just a second when I do the comparison, but remember, we talk about this in terms of like a shrinking iteration as well, where you've got this particular kind of shape, and then it shrinks. And what is this shape? Well, this shape is essentially exactly what we're describing here. It's that move to check that ear. It's that cat ear is the move across the, if you want to call it, it's a move across the creek, and then a redistribution right here to come back down and check that level, right? And back check it. And no matter how it sets up, whether it sets up more vertically or diagonally or whatever, like downward, I should say, that it doesn't really matter. It still works. So interesting, right, is one way to put it. But I also feel like it's pretty significant the way in which this is actually played out and given us a very, very similar, if not identical, motif here. So the first part of this would be looking at this local guy, and I've made a case already. I already did the comparison. I'm not going to do that on screen today, but I did a comparison a while back on these guys, and I talked about how locally speaking, like this is the middle of the schematic, and I basically feel that at this point I can kind of prove it, because just like in the master schematic, which I keep moving around and messing up. Here, I'll put it on this side. Just like in the master schematic, when you get to the right side, you're coming out of that arc, right? The big buy up, and you're moving up, and then you're going right into that last cat ear, which you do in the big jump over the last thing. This is exactly what we did, like exactly what we did here. And oddly, I don't know if I missed it or if I was just way too early, right? But this is exactly what you see in this final movement here. And it's ultimately like this is the big cross. We just drew it out small, and now I'm drawing it out large. And you might say, yeah, but what about the other one? What about the one that's like this? That's way big, right? Well, you got that as well. Remember, here's the big one. And then you've got the downward action, right? And we just said, like, hey, it goes right into the other one. There's the downward action, and look at that ridiculously flat top right there, and how that's playing out in all this. And there you have it again. So the idea was that we were here, and I've not seen anything that we were here in August. Excuse me, I've not seen anything that's disproven that yet, or made me think that that's not the case. Everything's kind of reinforced it. What's confusing is this ending, and the more you stare at it, the more you're kind of like, oh, well, I kind of get it. You know, I'm seeing that narrowing in is before that final drop. And then where is it going? Well, everything seems to be directing it towards this really low low. And unfortunately, right, based on the way we were looking at it, we were confused for a lot of reasons. I don't want to talk about the charts too much for that purpose, but we were pretty confused, right, by the overall price action. But remember, this is a shrinking iterative move. So the most bizarre thing about this is that you can continue to break this down, right? And you can continue to break this down like over and over and over again. And that's exactly what we were doing here. We saw it shrinking. We saw the pattern shrinking. And again, you might say, well, what does that mean, though? Does that mean that this is like all part of some gigantic distribution or whatever? It's not a distribution so much as it is like a way of trading a sine wave. Again, it's like you're jumping over each time you're doing this, you're using those cat ears, that formation, to just hop over a creek. And then eventually you got to come back and test all the creeks, the big ones, the ones that you kind of jumped over and you didn't really bother to back test too much, right? It's the direction of the stock. And I think I would argue that on the biggest possible picture that we're doing the same thing, and we're doing it in a way that maybe we didn't like, right? But this is the original supply. This is the new high. It's no different. And then this is that drop to go do the check. And all these things, yeah, they might sound a little bit crazy, but they're not guesswork on my part. I don't feel like that. I feel like it's strongly evidenced in the way the price moves on this chart. However, you might say, well, dude, if you knew that, then you would have been talking about this really low a long time ago. Well, I was talking about 255 because that's the earliest one I could find. And I wasn't sure what this was. And back when I was doing that, I thought this was one of the last iterations. I thought we were going to end in like April. I thought that this was much more narrow, if that makes sense. Like it was shrinking really fast. I didn't think that it wasn't. So when I look at the big picture now, it makes sense to me why, yeah, of course, this area right here looked just like this area right here. It was the little armpit, right? Or the little space between on the cat ears. Like it makes perfect sense, And naturally, every time this has happened, right, you're getting that smaller creek cross each time. And every time you get that same sideways action. And the most bizarre thing about it was this final move where it looked like it was getting ready to go up and it was going to avoid a spring action. And in fact, it went back down. But as I was saying, on the combo chart, it kind of gives us the impression that it didn't really do that either. It didn't really go up. It actually stayed in the range. It kind of made a move to the upside and then came back down and never really left. It'd be like if this guy made a move up here to the top of the range but didn't exceed it and then so it like moved up and then it had a drop, right? It didn't really make a move out, like this one did. It was very confusing, but hey, that's what happened, okay? So when I'm looking at this now, I'm thinking about this schematic and I'm like, well, is it done? Is it reached the goal that it needed to reach? The answer is I'm not 100% sure. And I don't think anybody can be. But I can say this, that I found what I'm going to call a trajectory line, and it really begins on this. If you take a 50% of this walk up on this reaction, right, when you dropped out of this original range here, right here, this particular 50%, if you use that and then you use the bottom of that backup, it also gives you that 1165 target, which is the one that I found 100%. I didn't find it by doing that first. I found it by following these creeks down, and I did that by attaching them to specific points where it breaks down and then where it finds support back on that thing, and based on the patterning that we were just talking about right here and how we see that. And sure enough, that 1165 gives some really strong, very, very valuable targets, which make a lot of sense to me. So first of all, I'm not 1,000% sure if this constitutes a creek check, but I will say, yeah, if you go back, that 1165, go back to where that is, that's the bottom on that tiny little LPS. It's pretty wild. So everything was kind of directing it to come back down and redistribute back to that bottom. And that's the bottom. That's where the LPS happened. The tiny little last point of support before the big move. And that's the place that everything is kind of intersecting at right now. If it is true, and this does move to the upside, I'm looking at this particular trajectory and I duplicated it. And I looked at where does it intersect that trend. Where does it intersect this trend here? And I'm going to make it just like that 2020 move. And you'll notice that right where it intersects the trend is that 159.62 mark, which is that 786 reversal mark here. And that's right around that region, which would have been around $21, right? Which we've been talking about for a long time. So what's interesting to me is that right now, there seems to be, if you're going to do a markup here, there seems to be a possibility, a strong possibility even, that you could be heading towards that intersection. And it's not just that, but it's also like the doubling. You see this? This is a 50%, 50%. It's also like the doubling target. So it's the slingshot target, right, around this gap that we made. So if we were to push up an SOS here, it would make a perfect, like it would make like a perfect S-curve, mathematically speaking, with a 50% swing up to this target. And I know you're like, well, does that really matter? I'm not 1,000% sure that this particular downtrend matters, but I do know that level is super critical. And then if you look at the floor, that intersects this low spot right here. So each one of these markers coincides with a diagonal and a horizontal, which by itself may not seem very miraculous, but when you look at the sum of the whole, it's kind of like, oh, okay, you know, it's starting to sort of present this really strong case, in my opinion, that each one of these is where you're going to check before you mark up. And ultimately, you might be wondering, well, where does this go? Well, this ultimately goes above. You do get your first sell-offs when you get right above this trend, and it does end up resting on top of it. So that would be like us coming up and then continuing to break to new highs and then coming back on top of it. I don't think that's necessarily what's going to happen. And I'm not going to say, no, it can't possibly come up here either. But I'm going to say that right now, not going to count on that, right? I'm not even going to count on it coming necessarily past 72 again, which would represent like the previous all-time high, you know? It needs to first get over 38. And that's why I started with the video, because it doesn't really matter if all of this stuff lines up and it looks really nice. It does line up. It does look really nice. And it does make a lot of sense if you think about this as a sine wave and about checking all these levels, but ultimately comes back to that place where they're all pointing towards, which happens to be the beginning of that run that started in Mark 6. All of that stuff makes a strong case that there's some kind of an algorithmic move here that could be at play. And then you also have this idea of that strong reaction possibility. But none of that will matter if we come up high and we don't even get to 38, or if we come up high and we reject there around that 43 mark. All of that would indicate that you're going to come back down. Now, short term, because you come back down, make a 50% retrace, and then push back up, yeah, the same kind of stuff happens here. You know, you get these big moves and then big retracements and then whatever. So don't take it as like it's all or nothing. If it gets up there, it still has to show us, right? It still has to show us. So all of that being said, 38.5, that's the big number. Hope you guys have a great trading week this week, and that we don't see a full-on capitulation. But I do think we have a strong chance of seeing 38.5 this week, or very soon. I wouldn't say this week, but maybe over the next 2 weeks, 2 to 3 weeks, we might see that. I think this is a big sell-off, and I think it's going to have a big reaction to it. I really do. All right, that's all I got for you. I hope you all have a good one, and we'll talk to you later in the week.